Bring in Chris Conway. He's joining us from Australian Stock Report. He's in our Melbourne studio. Chris, welcome to the show. I believe you've been listening in to the discussion that's just been had. How are you sort of positioned in equities right now? Are you overweight, underweight?
Good afternoon, team. Nadine, as you might remember, I'm more of a short-term focused type of person, so I don't really have a big portfolio that I need to position one way or the other. What I would say, though, in terms of the local narrative is that I think that we're just in a quiet patch at the moment. Obviously, we had the December-January rally, and we're sort of all waiting for the moment in terms of what's going to happen during reporting season. Prices have become a little bit stretched. We all want to see if earnings can justify the prices that we've been having to pay for stocks recently. So, yeah, like I said, I think it's a bit of a lull period at the moment. We don't have the narrative like we do in the US, where there is, the melt up and the, everyone's talking about the global growth story that seems to be fueling US markets running higher. So, yeah, we're just waiting to reporting season and see what comes of that.
And what do you make of some of the reports we've had come through already? I note that TWE, reporting yesterday earlier than had been expected and having yet another good day today.
Yeah, so there has been some positive spots. I would think on the whole, this is just anecdotally, that we've had more positive confessions rather than negative confessions. QBE is one that stands out on the negative side, but I think on the whole it's been probably more positive, and I think that's what everyone is expecting heading into earnings season. There is the expectation that we're going to have a strong reporting season, and that the prices, as I said, that we have been paying for equities will be justified, and hopefully that further out provides the next leg up for our market, as we've I think, as Adam was just saying, really struggled to get through sort of 6,000 through to 6150. That's been the cap on the market. We haven't wanted to push higher because we haven't had the impetus to. But again, it comes back to reporting season. It's the great equaliser. It's when all the noise gets discounted and we get a very clear picture of exactly how the companies in our economy have been performing.
Rudy, GUD Holdings reported yesterday having a good day today. It's the top mover on the 200 by percentage change, up by close to 5%. What did you make of the quality of the report, and I guess any themes that were emerging from it?
I have to say I am a close follower of GUD, and the reason for that is it's actually a business model in transformation, and they're going the right direction. I think my microphone's not working, is it?
No. Just speak up a little, Rudy.
Okay. They are transforming their business, and they're becoming a automotive aftermarket business.
Yep.
The rest becomes less and less important. If they can't sell it off, it becomes less important in terms of percentage-wise what they derive from it in revenues and profits. Assuming that transformation is going correctly and is going in the right way, and it's at the moment happening, this share price will be a lot higher in the future. And that is basically the key point that investors should take away from here. It's not what is happening today at GUD, it's what's happening in the coming few years, and this company probably will become more of a Babcock, for example, or an AMA, which is very much linked to the fact that we have a lot of cars in Australia and they need to be serviced every year.
What did you make of the GUD Holdings report, Adam?
Yeah, I don't really follow the stock, so I'll leave it up to the experts.
No worries. So let's talk with Chris Conway from the Australian Stock Report about some of the companies that you are following at this time. You've got Ansell on the list. So are you looking at Ansell, I guess, because it stands to benefit from the whole US growth story, this coordinated global growth story?
Yeah, certainly, Nadine, that's one element. Ansell is a stock we like coming into reporting season. We think it will report well. As you say, it stands to benefit from the uptick in not only US economic growth, but the global growth story as well. A good example of that is that Ansell provides a lot of products into the US fracking industry, obviously an industry that has grown pretty strongly in recent years. So that's just one example of where it might stand to benefit from that growth story. The other important factor, of course, is that latex prices have remained relatively low. It's one of their key cost inputs at a time when they've also been able to ramp up their prices for the latex products they sell. So, yeah, there's a few dynamics in play there. We think that's one that could surprise to the upside. I'm not the only one thinking this, of course. There has been some brokers out recently that have given it an upgrade, and the price has run a little bit recently.
Okay, so when it comes to Downer EDI, What are you hoping to see in the company's report in the upcoming reporting season that would make you look more favorably on it? Because I believe you like it. Is that because of its value, its valuation?
That's exactly right, Nadine. This is, a potential value play. As I was saying before, we have had to pay some pretty lofty prices recently for the stocks that we've wanted to get involved in. And I think, a lot of people have been scouring the market for value, and I think Downer is one that potentially offers that. So, the price has sold off over the last 6 months from a high of about 740 into 670, so circa 10% sell-off at a time when the broader price momentum and earnings revisions have remained positive. So that's sort of where the value comes from. If you look at where it sits within the sector that it operates in, it's operating at around 14 times versus its peers between 21 and 23. And probably some of the reason for that is a bit of question marks around the integration of Spotless, which remains a key risk, along with contract negotiations and cost blowouts, as is the case with all sort of infrastructure services companies. But if they get those things right, there is the potential for a re-rating here, and that it offers some value at current levels.
All right, so that's Downer EDI. Talk to us, I suppose, about what you're seeing for oil. I mean, are you playing in any of the big cap space here in Australia, given your outlook for oil?
Certainly. So Oil Search is probably the one that we prefer at the moment just because of their recent production update. It was a little bit soft in the December quarter, but if you look at it on year, they had record production and their sales were up 17% as well. So, some fairly strong momentum there. And yeah, in terms of the oil price story, a lot of people think up around $65, sort of $60, $65 where it is now, after what has been a pretty strong run, that this might be the cap. I think we all sometimes forget that oil prices in particular, they overshoot, and they overshoot significantly in one direction or the other. We saw it to the downside when oil prices were down at $30 a barrel. Wouldn't be surprised to see oil prices hit $80 at some point throughout the year. That's because, fundamentally on the supply side, supply is being crimped. We all know about the OPEC production cuts. Saudis were agitating recently to try and extend that out to 2019. And it's at a time when, as we know with the global growth story, demand should be picking up. So you've got crimped supply, demand increasing. That can only be supportive for oil prices. Layer over the top of that oil prices tend to overshoot. That's how I arrive at, potentially seeing oil at $80 sometime this year.
Yeah, that's a lofty level. Big call. We've got Beach Energy today, Rudy, performing quite well, up by about 4% in the wake of its production report yesterday. What do you think, though, is driving the exuberance today? I understand that the company is open to LNG exports from its Waitsia project, which, the LNG market is going quite strong right now.
Yes, at the moment, yes, but there are still some question marks over there. It's all about China. I think in terms of Beach, it's all about the integration of the assets they're going to buy from Origin. If you take a
the Lattice Energy assets.
Yes, if you take a positive view there, then Beach Energy is about to become, I think, the 4th largest oil and energy company on the ASX. That will by default generate a lot more interest. It will move up in the rankings, and if you take a positive view, and that is that management will do all the right things and will get everything together, then the share price has a lot of upside, of course. But I must admit, I do not share the oil price outlook that we just heard.
Why not? Can you give us the counter argument?
Yes, the counter argument is that production in the US is already ramping up.
It is.
Exactly.
Yeah. Adam, Beach Energy, give us your view.
We've officially got a sell on Beach Energy. Basically, our analyst has said that he doesn't see any real value going forward for Beach, and the asset that they're getting off Origin has got a lot of work to go forward. So he doesn't see any real value, and I think he's got a sort of an 80-cent price target on it. I think he's fairly negative on the story.
All right. Chris Conway, Australian Stock Report, before we let you go, can you tell us what you've been selling in this market?
So recently sold out of A2 Milk. Look, we were sitting on a healthy profit, and it just looked a bit stretched. It needs to report well to continue that growth story that we all know about. But it was just an opportunity time to take some profits. But other than that, no, just holding ANZ, McMahon's, and Kathmandu at the moment.
All right, Chris Conway, thanks for joining us. Appreciate it.
Thanks, guys.